Wednesday, August 20th, market analysis, Stan Ehrlich. Sorry, I'm recording quite late today. Computer problems, but I think I fixed most of it. Unfortunately, we don't have today's data on the daily data chart here on the E-mini, but you know it was a down day. Made lows a few points lower than yesterday's lows, and it's not showing at the moment, but the other charts are okay. And it closed a little lower, a couple points on the day. So we have continued to start moving lower. Recall in the next couple of days, I've said I expect the market to top out. I would hope to get more sell signals, which I didn't, only in the Russell. But overbought conditions and other indications tell me that the market should be, I think it is, going to be going down now for approximately 2 months. Somewhere during October, in the last 30 some years, we have had a buying opportunity, sometimes hugely profound, some in a multi-year, sometimes only for a matter of a couple of weeks, but nevertheless, a buying opportunity of some significance. Again, sometimes they're not that big a deal, and sometimes they're huge, major. So we just had a little bit of a dip today that you don't see, unfortunately. But on the 5-minute chart, there it is. It opened, dropped off like a rock at 6:30, right about there. Overnight didn't do too much. Made way new lows for 1, 2, 3, 4, 5, 6, 7 days, and came back okay, but still down a couple of points on the day. That changed. Now, what about the Spider SPY? It does have today's data, and I don't think any other charts are missing today except for the E-mini. And the Spider dropped off pretty nicely, pretty substantially. Came back fairly well, but still down a couple of points on the day almost, and did some significant damage by dropping off that low. I need a close below 618. Well, yeah, it'll be fine. To be really optimistic that my October lows are going to happen again. That level is pretty good support for the SPY. And by the time we get down there, if we do, it could bounce off of it because it might be oversold also. But I think it's going to get broken, and probably before the end of the month. Next. And today's the 20th. Next is a Spider 5-minute chart. Next, we've got that big break continuing, although the close is relatively good, on the QQQ. Same commentary, and the Qs have already dropped off quite a bit. Today's low is the new low for like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. Although the close was, not that bad. But nevertheless, new low close, new lows, getting close to the first vestige of support, 551 3/4. 5-minute chart came back relatively well toward the end of the day. Opened and tanked, and then, inched its way back up. Next, NASDAQ futures, same thing, and almost getting very close like the QQQ to the first significant support level, and getting pretty close to overbought also. Now, this does not look like an RSI chart at the bottom. It's my custom relative strength index. I learned RSI from Wells Wilder himself. One of the lecturers also in the international circuit for 2-3 decades. And I guess I know RSI. But I customized it to my own personal preferences. So I think it's going to get oversold if we drop off at the support, like I just said a moment ago for the other symbol. NASDAQ futures, new lows, came back relatively well. You can see it actually made new lows for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. Yep. Next chart. We got the YM Dow. First high, got a bearish engulfing, worked for a day or two, no big deal, but it worked. Second rally, slight new highs, couldn't go anywhere, dropped off to even lower than the last time, but it got oversold and hit a major support area. So that's still a good support area. Oh, come on, don't do that to me. All right, here we go. Gotta drag this line here. Good. Put that one over where, oh gosh. Let me do that later. So the point here is third high, didn't have any follow through, came back a little bit Monday, Tuesday, and today doing nothing. No higher highs, and it dipped back a little to support. And we just reopened this moment, 3 o'clock California time, up 6 ticks. Wow. Okay, so we've got the 5-minute chart. Doesn't really show you too much. It didn't break down all that badly. It's not a new low for as many days. It's just no bullish follow through. Russell dropped off pretty good. Yesterday we had a bearish engulfing ER official sell signal, which causes me to expect a significant break in the Russell. And if that's true, then the other indexes aren't going to stay where they are. They're all going to be coming down. I just didn't get the reversals I would have liked, except in the Russell here. And that could have been, should have been, I would have loved it if it was on the top of a rally. We got the bottom of the break here on April 9th to the lowest day, green bullish engulfing ER buy signal. So this one looks good so far on the way down. Opened just now, very slightly higher. Next, we've got the 5-minute chart on the Russell. Nothing going on. Starting to chew its way down. Next, we've got the bond market. Has already reopened, 3 o'clock California time, slightly higher. Now, bonds, I'm having a little difficulty. I expect it to slip off toward the yellow line, the bull trend line, and have another fairly significant low. Overall, I think it's in the process of building a long-term bottom. I can't be real bearish long-term on the bond market. I think it's likely that we may come down to 12.5, 11.5, 112.5, 111.5, and then turn around again. But it might start going up even sooner than that. So this is a little bit on the tough side for me at the moment. I had something going, the head and shoulder, but it failed. Next is notes, and that's going to be the same kind of commentary for notes. Although I'm short-term slightly bearish, without any major convictions. I do expect this to be developing a much longer-term bottom, though. Next, crude. Reopened, tiny bit higher, support area, holding, nice close, up on the day a little bit. New high close for about 3-4 days, but not a new high yet. It starts to close over 63.5. Then we probably stand a chance to go all the way back up to some resistance levels. Meantime, oversold conditions and support seem to be helping push it back up some. And next is the daily data chart on natural gas. This head and shoulder top formation has been doing outstanding. It has kept on making lower lows every few days. The minimum downside objective I've talked about now for, probably 2 to 3 months is 1.15, between 1.1 and 1.2, whatever, right in that area. Yeah, sure. So it's just plain inching its way down consistently. And that's exactly what I expect. Got no reason to do anything else but say anything else on that. Little rally here, short term on heating oil. Got oversold a couple of days ago, so I'm not surprised. I don't think it's going to go very far. So modestly friendly at the moment, but I really don't have any exacting commentary for you. Next is the gold market. Silver, platinum, then copper, then grains, then some stocks. We have an outside up day, bouncing off support. Friendly. Now, the bearish engulfing we had a few days ago did work fairly well, very, very slightly, not a lot, but it worked. Market did go down, new lows, a couple days, but support is holding. So now I expect a bit of a rally. Maybe we're not going to get above the high of the red engulfing ER sell signal on that is August 14th, in which case it may go sideways and then start to drop below support. Now, if it breaks down below 32.99, that's bearish, especially breaking down with large volume on a sharply lower close, and it closes below 3,300, let's call it. That would be pretty bearish. Next, we're back down in this old pennant or wedge formation in silver. Yesterday, and the day before. But we managed to pop out of it on the reopening just a few minutes ago. So if it stays here, it might work its way a little higher. This is currently between a rock and a hard spot. Remember, I'm trying to figure out whether this is a legitimate head and shoulder top or not. I've got your neckline drawn in for you. The shoulders are a little bit lopsided timing-wise, but if we have one more rally and it fails in a few days around 38.5, then it's going to look like something on that side relative to that being relative to what we might see in the short term. That would be very interesting. And the timing would be a lot better. Next, platinum. Not saying much. I don't know. The move down may not have finished. No support, no reversals. Looks like it could still work its way a little lower. Not very sure about platinum. Don't have a real strong opinion. Copper just keeps on slipping again. Can't seem to get through this resistance area, which it did stop at on the way down on the gigantic crash day. Unbelievable that it did that in one day. You realize the close is way up there, but the low was incredibly down and then ran right back up. This is probably the biggest range day in history in copper. So slipping off a little. I expect to see lower levels soon. Soybeans, grains, bean oil, meal, corn, wheat, and then we've got stocks. So bearish engulfing a couple of days ago, still the high of the rally, perfectly, bingo. 2 days later, a little challenge of that, but it didn't make any higher highs. Sold off significantly yesterday, and today came back very slightly. Doji doesn't mean much. It is bouncing off a little support. I don't think that's going to hold. Probably by the end of the week, we might be below the support level, under 1026, and I think that's going to happen very soon. Again, maybe in the next couple of days. New low close in soybean oil, and this is now doing major damage to what I had expected to be, and it worked very well for quite a while, the previous head and shoulder bottom, because we closed today a little bit below the neckline. Unless we rally very strongly, very quickly, which has happened before, then I'll turn bullish again. But this is the beginning of the end, or it was the end today. You're not supposed to close below the neckline. It is a cardinal rule. It kills the formation. So if that's true, now what? Probably dribbling off some more. 49.10, 47.30. Next chart. Soybean meal got overbought today, up against resistance almost. It finally got there almost. So I think that's good enough. It might still get up a little more. Just because it's overbought today doesn't mean it's going to stop rallying immediately. It means it could, usually, most of the time, does stop rallying within a short relative period of time. A day could be, or a few days, a little more likely. A week or two, yeah, it sometimes stretches on to that amount, but not very often. So before the end of the week, very possible. A little higher, very possible. But this is the beginning of a turn back down, I think. Soybean meal. We got a bottom green engulfing on corn. It worked great the next day, which was Friday of last week. Then there was no follow through on Monday, Tuesday, and today's sideways. Is that bullish engulfing ER buy signal going to give us more strength? I think so. I like the way things look. I don't mind it dribbling back yesterday and today. I'm looking for a move up probably to, I don't know, 420, and it might close the gap up at 441. Next, wheat. Oh, here we go. Bullish engulfing today, brand new buy signal. This is a significant low in wheat, potentially. All I can say is sometimes these things last a day or two or three or four and have a modest rally. Sometimes they are a lot more profound than that. And this begins a move up for months, if not many months. You know how low this is. And it's about time. We had an attempt to have bullish engulfings on August 18th and also August 11th. This looks very interesting. I like this. I'm looking for a rally at a minimum up to 556. Next, Shell. It's a stock right between a rock and a shell. Hard spot. It's going sideways. I need a close below 70.80 or a close, probably a close that would work above 73 to be an upside or probable upside breakout. There is a resistance level that has stopped it a couple times now, so you got to watch that. Next, coming down some more after being overbought near the top of the Apple resistance area sharply. You know, they say the way Apple goes, the indexes go. Looking for lower levels. Next. Oh, boy, we touched the bottom of the old pennant in Tesla. One level I've been talking about for several days. We had yesterday a bearish engulfing, and it went down a chunk today. I think it's going to go down more. I'm frankly expecting at least probably 291, and I'm not going to be surprised if it gets below 273. There's an old gap to close. I'm not going to talk about that at the moment until we start breaking down more. NVIDIA, sharp break, but it got oversold, came back so-so. We now have damage done to a relatively high, not that big a deal, support level, but it didn't stay below it. So it cracked it, broke it, and then came back up again. And I'll put the line where what I'm talking about here. Just about like that. Yep. That's good. So next one down, 164.30. Yeah, 164.5. Next one down is much more important. 153. We'll call it 153 is correct. Give or take a little, of course. And we're back to the E-mini. You have a great day. Sorry I'm late today. And profitable trading to you. Remember, ask for the October low report. Email me at info@ersignals.com. Thank you. Profitable trading to you.